Hello, trading has closed on October 6th, 2021. We always start with our disclaimer, so let's do that. It's my trading plan for tomorrow, October 7th, 2021. Just remember, I can be completely wrong, and any trade you make should be at your own risk. It's particularly true today because I've been away from the market for quite a few days, and based on past experience, it'll take me a few days to get back in the swing of things. When we left, the last call we had was that we had some targets, 43.35.66, 43.16.04, and those printed immediately. We also said we were close to forming a low, and there was some recovery once these levels were hit. Now, this is just a reminder of what we said. Let's take a look at today's MEJT pattern. We had a buy signal in the afternoon, but the minimum target printed immediately. Doesn't mean you aren't going to go past the minimum. It does mean a rally doesn't have to retrace, and it does mean if we dropped instead, it wouldn't stick. But even if you didn't take advantage of this rally, at least the system argued against going short. This is the longer term pattern. This is 2 months straight that we've traded under the prior month's low. That hasn't happened all that often. This is DeMarc's call for a top. We're still looking for the recent high to hold until we get more of a decline than we've seen so far. As far as today's action was concerned, it's easy to count 5 waves up. You have good fibs. This is the prior highs. You'll notice that we closed under all these highs, so the day-long rally didn't really accomplish anything. Doesn't mean it won't continue tomorrow, but as of now, it's a strong rally which merely challenged the old highs and couldn't surpass them. Now, what's positive about the pattern is we gapped down, hit a lower low, and then closed over all these lows. We even closed over all these highs. It's a bullish pattern, but it has to be maintained through tomorrow's open. If we move up smartly at tomorrow's open, then this so far unsuccessful challenge of these old highs doesn't mean much. And if we drop right from the open, this bullish pattern doesn't mean that much either. This is our longer term count. We certainly haven't had the type of decline in wave C, blue C, I've been looking for, so it's always possible it's wrong. But until it's invalidated more convincingly than that, I'm going to stick with it even though it hasn't been confirmed. Really want to undercut some of these lows for confirmation, but we're looking for one of these price targets to be a logical stopping point, probably around 4,200 cash. Well, this is how I'm counting the drop from the high. We have this A. We now have an ABC. Here's magenta A. Magenta C is exactly equal to A. And today's high is a Fibonacci retrace of the last wave. Here's wave C. 38.2% comes in right here. So we have an ABC with C equal to A. We've got 5 waves up with good fibs, and we have a Fibonacci retracement of the prior down leg. Now, normally you'll recover 61.8%, and when you recover only 38.2, it can lead to some pretty severe drops. We don't know at this point if we're going to stop here or not. We won't know that until we see tomorrow's action. But if we do stop here, it could lead to a wave red C, similar to wave red A, which I think was something like over 200 handles. Doesn't have to exactly equal it though. Well, here's the challenge of the old high. Here's MACD. You'll see MACD's lower. Here's RSI. You see RSI's lower. In spite of this big rally, decliners outnumbered advances, and breadth, the number of stocks with favorable chart patterns, actually dropped slightly in spite of this big rally. So none of these are good things. We have a strong rally too, but not through resistance. And if we're going to get more out of it than this, we better move up smartly tomorrow. Because this is a wall into the close, there's a very good chance, but not a certainty by any means, that we gap under this low. And if that should happen, which certainly is not a lock at this point, but if it happens, it could be the start of something very major on the downside. Again, you gap up smartly, take out these highs, a lot of this argument goes away, and we won't know that until tomorrow. Thursday's pattern has the early low. We could still gap up. Normally, it's a bullish day with a final hour high. But if it's weak, the weakness tends to show itself early and be followed by more weakness in days to come. Now, we gapped down, hit a lower low, closed over all the lows, and that's a bullish pattern. It should lead to higher prices unless that's reversed early. But there's a good chance, not a certainty, we will get a reversal early, as the rally did not clear prior highs, stopped at Fibonacci resistance, had more decliners than advancers, and breadth actually deteriorated as well. That's not the way you want to move up a low. That's not the way you want to move off a low if these lows are going to hold. The market's at risk from dropping right from the open. Bulls need to carry the advance past today's high promptly to vitiate the negative implications of today's trade. I'm not impressed by this. It's vulnerable to dropping right from the open, but that isn't a guarantee. And if we clear these early, then you've overcome strong resistance. And when you overcome strong resistance, there's usually more to be said for the upside. So this is kind of one of those points where you should either plummet or have a strong advance, depending on whether or not this level holds. Tomorrow has the early low, tends to be a bullish day, but if there's early weakness, look out. And that's today's call.